today I'm going to be talking about whether you should get a lifetime ISA or a pension to save for your retirement. Now, both these products exist out there, and on the surface, it might seem like they're kind of offering you the same deal. So how do you make the decision about which one is going to be right for you? Is it a lifetime ISA that you need, or is a pension the right thing for you? Or do you even have to make that choice? So let's jump in and take a look at these two products. So what is a pension then? Essentially, a pension is a investment product, okay? It's a type of account that you can pay your money into and invest through that. Lots of you might have experience of pensions through a workplace, and this is where you have paid in and maybe your employer has paid in too. Now, in that pension, you will have been invested, okay? This might have been chosen for you if it's done through an employer, or you may have made some decisions about this yourself, either through your employer or if you have your own personal pension, you'll have made those decisions on your own. So what's a lifetime ISA then? So a lifetime ISA is another version of an investing account. They come in different options, and actually lifetime ISAs can be used for two different things. They can be used for buying your first home, or they can be used for retirement. Now, because we're talking about this versus pensions, I'm assuming that you're not here to figure out whether you should buy your first home, okay? That's a different video. So what we're going to be talking about today is a lifetime ISA as a retirement option. Now, you can get cash versions of these, or you can get stocks and shares versions of these. Now, normally when we're thinking about retirement, we are looking at growing our wealth. So you could use the cash version and just save the money, or you could look at growing that wealth so you actually have a bigger pot for when you retire. Now, I should note that this is not financial advice, and you may want to reach out to a financial advisor to get information about your specific situation. This is just for educational purposes, so that if you do go and see a financial advisor, you'll have a bit of a clue what they're talking about before you go in. Now, let's look at some of the similarities between these things. So when you pay into a pension, you are entitled to something called tax relief. So if you are a basic rate taxpayer, you can get 20% tax relief. So this means if you pay in 80p, the government will top it up with an additional 20p. So you get a full pound in there. Now, there is additional tax relief available if you are a higher rate taxpayer, but I'll come back to that in a second. Now, with the lifetime ISA, there is a 25% bonus. So what this means is that if you put 80p in there, the government will top it up by 25%, which works out at 20p. So essentially, if you're a basic rate taxpayer, these benefits are the same for both a pension and for a lifetime ISA. Now, there are some differences. So with a pension, you won't be able to access that money until you are 57 at the earliest. And then you might have to make some decisions around how you get access to that money. With a lifetime ISA, it is 60. So you won't get access to that money until you are 60 years old. Now, you can, with the lifetime ISA, access that money early if you want to, okay? So you can get hold of that money. Now, with a pension, it is locked away, but with a lifetime ISA, you can withdraw that money. But there is a penalty. Now, this penalty is 25%. So this could mean that you end up withdrawing less money than you put in. So you need to think about that very carefully. For most people, I think that when you're looking at a pension versus a lifetime ISA, both of these are long-term products. You need to be thinking, you're not going to access that money until you reach that kind of threshold. Now, let's look at the tax considerations for this. Pensions come with this tax relief. So that means you're kind of like putting your gross salary money in there. It's not been taxed. But when you go and withdraw that money at the other end, so when you reach retirement and you want the money in your pocket, what you are doing is you will be taxed at that point. So you'll be taxed according to like income tax. The difference here with the lifetime ISA is that with a lifetime ISA, that money is tax-free. So you get the bonus, but you're not going to get taxed on it when you take the money out. So that could be a real benefit of a lifetime ISA. There are limits to what you can pay into a pension and what you can pay into a lifetime ISA. So let's look at the lifetime ISA first this time. There are lots of rules around this. So for example, you can only pay in £4,000 per year. So there's a limit on that. You have to have opened the account before you turn 40, and you can only pay into it up until you are 50, okay? So no paying in between 50 and 60 when you can access the money. So there are some real restrictions on the amount that you can pay into these. So with pensions, there are some limits as well, okay? So there's like a £40,000 per year or a £1,073,100 lifetime limit before you have to start paying tax on what you save. So you could put more into it, but there might be somewhere better you could put your money after that. Definitely, if that's becoming an issue for you, you probably want to reach out and speak to a financial advisor. So you can definitely pay a lot more into a pension than you can with a lifetime ISA, and you can do that over a longer period of time as well. So you could get a pension essentially from birth, and you can pay into that, right up until you decide to retire. Whereas a lifetime ISA, you have to be at least 18 and you have to be under 40, and you can only pay into it until you're 50. So there's a limited amount on offer. Now, the government stance on this whole debate is that lifetime ISAs are not a substitute for pensions, okay? They really want to encourage people paying into their pensions and then to have their lifetime ISA there as like an added little bonus. And I think that's a good way to look at it. Use your pension, take advantage of any additional perks that come with that, such as, your employer contributions. So this is where, if you've got a workplace pension, your boss might be paying into. So that's all worth having. You get that tax relief, you get the higher limits, and it could be well worth your while to take advantage of that. Now on the side, you might want to have your lifetime ISA as well, and that might pay for that cruise when you hit that retirement date, okay? So there's definitely considerations for both. So when is it a good time to choose a pension? Well, first up, if you are getting those additional benefits from your employer. If they are paying into, you're also enrolled, you're getting that additional income going in. Could be a real bonus for the pension. Nobody's going to do that on your lifetime ISA. Nobody's paying into that on your behalf, okay? So it's definitely worth taking advantage of that from your employer. Also, if you're a higher taxpayer, you might want to consider the pension option just because you get access to higher rates of tax relief. So where you've only got the 25% bonuses available to everybody in the lifetime ISA, there is additional tax relief available that means you can get more money into your pension pot. And also with a pension, you can start paying into that earlier and you can continue paying into it for longer. Okay, there are restrictions around the lifetime ISA when you can pay into it, so a pension might be an option for you if you want more time to pay in. So when might you want to consider a lifetime ISA instead? Well, self-employed workers might want to consider this if they want to save for their retirement. Okay, if you're not meeting higher tax bands, it could be a good way to put some additional money aside for your retirement. It's also good for people who have maxed out their pension pot. So if you've maxed out your £40,000 per year contributions, which is a very fortunate position to be in, then you might want to consider utilising the allowance that you get in your lifetime ISA. Also, if you're going to need the money earlier, if you think that might even be a possibility, the penalties for withdrawal on a lifetime ISA are lower than those on a pension. So it could be something if you think that there might be some weird emergency that crops up and you need to access that money. That is one thing you can consider with a lifetime ISA. So the final question is, can you have both? Yes, absolutely. And this is what they were intended for in the first place. They provide an option for people in addition to a pension. You can have a pension and you can have a lifetime ISA. If you do have any further questions, please feel free to drop them in the comments below because I would love to use this as material for a future video. While you're there, don't forget to hit the like button, hit subscribe, and I will catch you in a future video. If you want to learn more about investing for retirement, then you may want to check out my financial education membership. It's called the Money Nook. There's a new workshop in there every month, as well as 2 big courses, one about investing and one about budgeting. We have a whole workshop dedicated to investing for retirement and the different options available to you to do that. Thanks for watching. I will catch you in the next video.